Meta is a creative work, referring to itself or to the conventions of its genre, referring to itself or author of the work. MarketMeta is a creative work of illustrated lines that articulate market structure and patterns. The first part of technical analysis is mental analysis. Clear the mind before opening the computer, clear the desk, and start fresh with a clear chart with no lines or markings. The second part of technical analysis is comparative analysis. Before covering this, we'll review candle anatomy and trading 101. There are two types of candles: distribution and accumulation. Distribution candles go down and distribute in price, while accumulation candles accumulate and increase in price. On the screen, you'll see two distribution candles in blue. Typically, distribution candles are red. To help with the mental analysis, it's strongly suggested to change the colors of your candles so that subconsciously you are not thinking red means stop or bad. Similarly, with the accumulation candles being green, change them to a different color so that you're not thinking green means good and go. Distribution candles and accumulation candles both have a body and a wick. You'll hear traders talk about a certain crypto, stock, or asset wicking up or down to a certain price or level, and or a body closing above a certain price or level. So that'll just help you integrate with the lingo of trading on the charts. Distribution candles distribute in price and go down, but they act as support when price gets above them. That's important to note, and we'll talk about it later. Just as there are two types of candles, accumulation and distribution, there are two types of ranges. A range is two or more consecutive colored candles that create a range. For example, two or more distribution candles creates a distribution range. Two or more accumulation candles creates an accumulation range. Feel free to pause and read what's written on the screen. We're going to be talking about distribution ranges. A distribution range is two or more distribution candles in a row. The first distribution candle in the distribution range is called the backside candle. The candles in front of it create the range of distribution. We're going to be talking about this first candle of the distribution range right there. And to help us see it a little bit easier and to identify the ranges, we're going to turn the opacity of the accumulation candle anatomy to 0. And so now our eyes can easily identify a distribution range here, a distribution range here, a distribution range here, here. You can kind of see, oh, that's a bigger one, more than 3 candles. We got 4, 2 in that one. There's a range. So not very, here's what, 3. Here's 4 of them. And so we mark the tops of the distribution candles, and they'll act as support. We focus on the first one in the range here, the backside candle. We're going to color it to the 5-minute time frame color, and we're going to focus on this candle right here. If time was right here, we could place an order to go long right there. And I mean, you can see how far it went up for an hour and 45 minutes. When price consolidates down to a backside support level, it has an expectation to have a strong reaction to price. If price is not preemptively wicking down to that level, then there may not be much liquidity or money there, and market sentiment is targeting a lower distribution range. Is there another backside level lower? Does it minimize the risk? Will price consolidate to the level, and how would I feel if I miss out on the trade? These are questions to be mindful of when starting to articulate your own market meta.